No matter how dramatic the end result, good to great transformations never happen in one fell swoop. There is no single defining action, no grand program, no one killer innovation, no solitary lucky break, no miracle moment. Rather, the process resembles relentlessly pushing a giant, heavy flywheel. In his 2001 best-selling book, Good to Great, Jim Collins and his team studied over 1,000 companies to discover the recipe for what it takes to go from good to great. And one of the concepts he explains is something called the flywheel effect. And this is something, if used correctly, that can set you on the right path for improving and succeeding in most things, but definitely in specific areas of your trading. So let's start with the analogy. Imagine a huge, heavy flywheel. As Collins puts it, a massive metal disc mounted horizontally on an axle, about 30 feet in diameter, 2 feet thick, and weighing about 5,000 pounds. Now imagine that your task is to get the flywheel rotating on the axle as fast and long as possible. What happens the first time you push that flywheel? You put in this huge amount of effort and it barely moves. Maybe it shifts by like an inch if you're lucky. But after trying for a few hours, a lot of effort goes into it, and maybe, just maybe, you'll have that flywheel moving one whole rotation. Then if you keep pushing, the next rotation happens quicker, and the next one even quicker. And after 10 rotations, the flywheel will be picking up speed. Then you keep going and the momentum builds more and more and more, and at some point you have a breakthrough. The momentum is in your favor, the flywheel is moving around on its own momentum faster and faster, and you only have to put in a fraction of the effort you did on that first turn to keep it moving really, really fast. One of the ingredients in the recipe for long-term success is to create this sort of flywheel effect. That way, rather than working towards a single defining action, you just need to continue a sustained, relatively small but consistent action that keeps momentum moving in your favor, driving you forward to more and more success until there's that moment of breakthrough. Success. Not convinced? Well, what if I told you that this is exactly the approach that Jeff Bezos has used to build Amazon, and it's the same approach they use to this day. If you read the books The Everything Store by Brad Stone or Bezonomics by Brian Germain, you'll find out all about how the flywheel effect has been a key driver in Amazon's dominance, and I don't know many companies more dominant than Amazon, so if it's good for them, it's good for us. So how can we use it to help us to develop and refine the skill of trading, or to develop and refine the trading system that we use? Well, in a way, these things have a lot of similarities to a business. In their basic form, all of these things are just inputs followed by a process that leads to an output. And in an ideal situation, whatever that output is, it's going to be something that positively contributes to our success in one way or another. So for example, one case of this might be where the input is our analysis, the way we're seeing the situation in the market. The process is our trading system and how we break down that information into the output, which is a trade entry. That's on a really broad scale. But then within that, we have a series of other smaller inputs, processes, and outputs. For example, how you choose your position size. The input is particular information you think is relevant. You process that information according to your system, and the output is a particular position size, which therefore dictates the level of risk you have in the market with that particular trade. So that looks like this diagram here. The sequence starts, the output's achieved, and the sequence ends. Now, what sort of momentum is achieved by doing this? If the sequence goes well, the output will be something positive, but it's not getting better and better every time we perform it. The first time you do this will be no different to the last time you do this. You put in the same level of effort for the same level of outcome. Instead, when we spoke about the flywheel, once the momentum kicks in, we're putting in the same or even less effort than we did the first time we ran the sequence, but the output is getting exponentially greater, better, there's more momentum. So instead, that model needs to look like this. Each output becomes the input for the next stage in the sequence, and there's no end to it. That means if the output is improving at each stage, the input for the next stage is improving, which will lead to an even better output, and so on and so on. The way the flywheel is set up means that every time it turns, the momentum is building up. It's like a positive feedback loop. There's a compounding effect to it. However, it also means that since every stage's output is the next stage's input, if you work on one of those stages to improve it, it's also going to have a compounding effect for everything. So if you put the effort into trying to improve something, it's not just going to improve that one thing, it's going to improve everything. So your effort has a bigger payoff. Let me give you a really high level example of how this might look for your trading as a whole. So in a basic situation, your sequence might look like this. You do your analysis, you open a trade, and you have some sort of outcome from that trade, a profit or a loss, maybe some learning experiences. So if that's the end of the process, you may or may not gain experience or learn from the outcome. It depends on if you picked up anything from that situation. It also means if you work hard to improve something, it may improve that sequence, but it might not lead to an exponential improvement over time. So that effort isn't getting as much bang for your buck as it could if we used a flywheel approach. So instead, with a flywheel approach, we can make sure that every time we take an action, no matter what the outcome is, it's leading to the momentum of that whole flywheel continuing. So let's change the example. So instead, our sequence looks like this. We open trades according to our system. After we've closed those trades, we can then analyze our data and the qualitative information, either from a trade journal or by revisiting the situation, to figure out what defines the right or wrong trades. Not necessarily the profitable trades or losing trades, but the right or wrong trades. From this, we then rework our system over time to be more geared towards finding the right sort of trades and less of the wrong sort of trades. So that then when we go back to opening more trades according to our system, the whole thing has improved. Now from this, I have 3 key areas I can work on improving them that will improve the whole flywheel. Think about this, I can open more trades according to my system or get better at sticking to my system so I have more trades that are correctly in line with that system so that now I have more trades that I can analyze to figure out what was right and what was wrong. I can improve how I break down the information to find those improvements. What if I worked with someone else who's better than me at data analysis? Or what if I got some software that helps me to identify what needs to be done? That will help me find what worked well or what didn't work so well much easier. It makes me more efficient, makes me more effective. And I can improve how I actually incorporate these things into a system. You know, it's one thing knowing what worked well and what didn't work well, and it's a whole nother thing altogether being able to create rules, strategies, and processes that help me to find more or less of that in the markets. But as you can see, this process itself, those stages and the way they're set up, will keep the flywheel turning faster and faster. And if I put any effort into improving the efficiency or effectiveness of any of those different stages, it won't just help that stage, it will help the entire flywheel. Now, of course, we have to be sensible about this. We don't want to be changing a system after every single trade, because if we want to see how successful a system already is, we need to let it play out over time. So instead, the changes will come in after a certain amount of time has passed or a certain number of trades, but that will be up to you in your own situation. I know a lot of you will be listening to that specific example and thinking, yeah, big deal. That's what I already do with my trading. I always reflect on each trade and think how I can improve things. But I'm sure if you're honest about it, many of you will admit that you don't actually follow those steps that are needed to keep that flywheel turning faster and faster. You might slack off in certain areas or not actually look for the improvements that you need to make, which therefore leads to the flywheel slowing down and you lose that momentum. This all works by maintaining that momentum. That's how it builds and builds and builds. Now, so far with the example that we discussed and the way we've looked at it, we've been looking at this from a high level with our trading, looking at our trading as a whole. But I think the real power from this comes from breaking it down throughout our trading. You see, trading is a complex skill and there are many different areas that you need to rely on to be able to succeed. And therefore, there are many different areas that we can improve. So if these different areas we need to improve became flywheels, you could have continuous improvement and momentum building from a relatively low amount of ongoing work. So rather than having to, for example, spend an entire week focusing on improving your risk management, You could think about how you can create a flywheel effect, where you just constantly put in a small amount of effort to keep that momentum going, to keep making that continuous improvement, to pick up speed. And you know what? The opposite can also be true as well. I think that longer term success or failure in trading is often about what feedback loops are playing out and whether they're positive ones or negative ones. And quite often that comes down to simply whether you have control of them or not. Like, think about this one, for example. This is a common one. If you don't control your risk management properly, which lots of people don't think is that important, then it's likely to mean that you open trades with position sizes that are too big. Some people will think, big deal, who cares? I just want to make money quicker. But by doing this, your loss aversion will be amplified and you won't trade according to your system. This means that when you encounter a loss, your drawdown will often end up being bigger than it should be. As a result of that, it's going to trigger this need to revenge trade, to avenge that loss you've made, which will lead you to jumping into trades that you shouldn't, but also it will lead you to taking bigger risks so you can make your money back quicker. Now, can you see how that's a loop? You know, you're going to take bigger position sizes and round it goes. It's a negative feedback loop. So spend some time trying to figure out where you might have these negative feedback loops in your trading, and then think about what steps you can take to either stop that negative feedback loop or even to completely reverse it, to turn it into another positive flywheel effect. And you know what? Leave a comment below as well. That way we can all have a conversation about it. Let's talk about what negative feedback loops you have, or even something negative that keeps happening, and see if we can figure out where there might be a loop that we can break and the steps that you can take. Everyone's always so shy, but ultimately, if you take that first little step of commenting, then the discussions and conversations you can have will pay dividends, the sort of insights you can gain from it. Right, so here's what's coming next. I want you to start breaking down your trading and thinking about what specific areas or processes could be shifted into a feedback loop and possibly a flywheel. What processes or actions would you need to take to make that happen? And here's what I'm going to do for you. In not the next video, but the one after, I'll explain how we can take this concept to massively improve trade entries in 3 steps. This is something you can implement straight away for your own trading, and it's also going to show you how you can think about the other areas of your trading as well. So it's going to be a really important, powerful lesson. And that's why I put out this video first, so you understand the foundations of what we're doing. And that's also what the next video is about as well. I need to explain something else to you, the way that I do my trading, which is a context-based approach to trading. And that's going to help you to understand how we're going to improve your trade entries continuously in the video after that. Okay, so these videos are all tied together. So make sure you're subscribed to the channel so you don't miss any of those. And also, you may not know this yet, but we actually have a cheeky little second channel as well. You'll find it linked up here and in the description box down below. It's called Market Movers, and the videos are focused on financial news, fundamental analysis, and really taking a look at what's moving the markets. They're much more frequent than what's on the Duomo channel, so if you want something to fill the time in between the Duomo videos, that's the place to look. So subscribe to Market Movers, turn on the notifications, watch the videos, like them, you know the drill. I really appreciate the support that you guys have been giving over there so far. And if you like this video, and if you're looking forward to the next ones, hit the like button. Thank you so much for watching. I will see you in the next videos. I can't wait to share them with you. Take care, guys.